What is going on, everybody? Hope you guys are doing well out there. It's a Wednesday, and it's a Wednesday night, and there's a lot going on. As most of you know, we had Nvidia earnings after the bell, also Salesforce, a handful of other companies reporting earnings. We'll discuss Nvidia earnings in depth on today's show. We'll go through them. I haven't had a chance to do a video of it, but I listened to the conference call, went through the transcript. We are seeing in the after hours shares of Nvidia up about 5%. This also on the heels of other news crossing late tonight. The Trump Liberation Day tariffs. Those were set on April 2nd, just the last time we actually went live here on the channel. Those have been shot down in a United States International Trade Court. And so a 3-judge panel saying what President Trump did was illegal. And at the current moment, at least as I'm talking to you right now at about 6:27 p.m. Pacific time here on the beautiful West Coast, right now, the Trump's tariffs are over. And he's obviously going to try to appeal this. There's stays. There's all types of things. My guess is the court system is closed until tomorrow. And so he will try to work this out as we move into tomorrow. Obviously, on the heels of this, we have futures, not only on Nvidia's earnings being very, very nice, but futures across the board. I was seeing Nike stock was up 3 or 4%. So it's like across the board. Stocks are ripping and ripping higher. We also have Elon Musk stepping aside from a federal government employee. This was expected. And look, the big, beautiful bill didn't meet his expectations, and he is out. He's got his full attention back on Tesla, which looks like their long-awaited robo-taxi service is coming to Austin, Texas. Say that a few times fast. On June 12th. So we're just a couple of weeks away. We've got so much to talk about. We'll talk about the conference call as it relates to Nvidia. I want to thank everybody for joining us. We got John Blake in the chat. We got Mike K. We've got William Dobson. We've got a lot of people joining us. We've got John. Thank you very much, all of you, for joining us again on this Wednesday night. We've got a lot to talk about. So look, I'm not going to waste any of your guys' time. Time is money. And, you know, if you had your money invested in Nvidia, you've made some. Over the past year, it's up 18%. Year to date, we're flat. That's not in counting, I believe, the after hours pop obviously stretches out to like a 5-year time frame and those types of things. Europe still very huge. How much more upside is left in Nvidia? That's the question. You got a $3.3 trillion valuation, likely headed higher tomorrow. We got answers to some of that questions. So the company announced their Q1 earnings after the bell, $44 billion in revenue, just 69% revenue growth for Nvidia. It would have been over 70-something%, I think 73%, because as I'll talk about on the conference call, they discussed that because of the H20 ban that was put in place, some of it was in place a little bit during the Biden administration, but it was ratcheted up a little bit by a lot by the Trump administration. They weren't allowed to sell these H20s. In fact, they had to take a write down in terms of that inventory. They would have had revenue of another $8 billion if it wasn't for the federal government stepping in the way. We'll discuss China. We'll also discuss Jensen Huang. His relationship, it appears, with the president seems to be particularly good. And if he can convince the president to open up the Chinese market to Nvidia, which they estimated on the conference call was worth about $50 billion, $50 billion. That's not for, a couple of years. That's a single year. And Nvidia believing that they could probably capture, again, they just didn't get $8 billion. So they're projecting $32 billion in revenue just if we go off of this number. Obviously, you have growth there as well. The company could capture $40 billion of revenue in China if it opens up. Now, we'll discuss here, not just the tariffs and those types of things, but the president is going to have two different sides pulling against him. He's going to have his national security hawks that advise him on a daily, maybe even an hourly basis in the White House about the threats that China pose if they get their when they get their hands or when they continue to develop their AI systems. And if they're able to do it on Nvidia, well, it could pose national security threats. So the president is juggling that aspect of it. And then Nvidia making very clear arguments on the conference call saying, hey, Mr. President, they're going to get AI one way or another. China is going to be a leader in AI. Do you want them to build it on Nvidia's technology, or do you want them to build competing technology, which they're already doing? Both arguments are extremely good. I think this is one of the most difficult decisions that the president faces, and we'll certainly see which direction he goes. But I tell you what, we also got guidance from Nvidia. They were expecting revenue in the upcoming quarter. This is the second quarter, the quarter we're currently in, $45 billion worth of revenue. Obviously, that's coming up light of consensus. Now, so some people are going to sit back and say, well, they had $44 billion worth of revenue. The expectations were right around there, but there were high-end estimates closer to 45. You have to factor in, they would have had $51 billion worth of revenue in the most recent quarter if it wasn't for the ban in China. And then the Q2, they actually came underneath the estimates, but the estimates on Wall Street did not factor that in. Now, sometimes you get punished in relation to that in terms of price. Nvidia not getting punished. In fact, shares, like I said, are higher in the after hours, again, despite slightly lower revenue expectations for the upcoming quarter. But again, most of that has to do with the fact that they lost about $8 billion in the upcoming quarter. So it would have just been an absolute spectacular quarter. Now, other things that we're monitoring as it relates to Nvidia is the Blackwell ramp. And so obviously Blackwell is the current generation of Nvidia chip. And during the last conference call that Nvidia had and during the last earnings, it didn't represent a huge amount of sales, but now we are seeing it's contributing nearly 70% of all data center revenues. And we see in the current quarter, $39 billion was to data center. I'll show you something else here really soon that in terms of compute, these are the actual chips. Of the $39 billion in revenue, $34 billion is the actual GPUs. The other piece of that is what they call networking. It's the networking of these types of things. And there are other competitors as it relates to networking. Now, they do have competitors on the compute side, but nobody that comes anywhere. I mean, nobody comes anywhere close to this company. $34 billion. I mean, most semiconductor companies are not even doing that over 6 months, let alone particularly a year. This company is doing it in a quarter. So they don't have any competition as it relates to that. On the networking side, as most of you know, they have Broadcom as a primary competitor there. We did see sequential, which is quarter over quarter, even year over year growth on the networking side. I'll discuss that here in a moment. But 70% of this $34 billion is coming from Blackwell. That's very good because probably next quarter, we're looking at a number closer to 100%. And then obviously, as we move to the back half of the year, I will talk about it in a minute. They actually have a next generation Blackwell, which is really just kind of an incremental change that is coming in the back half of the year as well. On average, right now, the major hyperscalers is a fancy word for Google, Amazon, and Microsoft primarily. You could probably throw Oracle and maybe a handful of others in there as well. They're deploying nearly 1,000 NVL72 racks, which is basically Blackwell. That's 72,000 Blackwell GPUs per week and are on track for a further ramp output this quarter. So in the past, it was like to have a cluster of 72 to 100,000 GPUs was like the biggest in the world. And now they're ramping that output every single quarter. Now, they have another system in place here. It's called the GB300. Those systems began to ship earlier in the month to major cloud service providers, and they expect production shipments to commence later this quarter. Here's the key thing about the GB. As many of you, we're getting a little bit into the weeds in terms of product for Blackwell or for product for NVIDIA, but I'm sure most of you are pretty well aware of what's happening here. The hopper to the Blackwell was a major change. You had to change basically your entire data center. You had to go from air cool to liquid cool, which was a complete change of the rack, of the system, the networking, everything. You basically had to build a whole new data center, not necessarily the walls and the roof, but the floor of the data center had to be completely changed. I mean, just going from air cooling to liquid cooling was a big change. The next generation change is not going to be nearly as difficult. The GB300 it was essentially a drop-in design which will allow cloud service providers to seamlessly transition their systems and manufacturing used for GB200 while maintaining high yields. That was also a challenge with Blackwell initially. They weren't getting the yields. There was problems. Look, it's kind of like a new car. We'll talk about Tesla maybe briefly at the end of the video. When they launched the Cybertruck, and the Cybertruck even right now is having issues. The door panels are falling off, or there's like different things that are happening because it's a new model. It's something that is new. The company is basically kind of prototyping it in the real world. Blackwell was being prototyped and there were some delays. Well, that should get smoothed out a little bit with the GB300, as you're really just kind of slapping on some more high bandwidth memory and a few other upgrades. So that's very good. Compared to Hopper, Grace Blackwell is 40 times higher speed. So this Hopper to Blackwell, this is like, if you're old like me, and I've got my brother Ryan, super producer Ryan, in the background. If you're old like we are, there he is. We're twins. We happen to be twins. If you're old like us, Ryan, you remember your very first phone was maybe a flip phone, or maybe it was like it's like one of those bricks. Okay, it's like going from Hopper is like going from the Motorola Razor to the iPhone. So, and a lot of you guys remember that, where it was like you had a Motorola, you had a Nokia, you thought you were the coolest guy, you might have even had a pager, and then boom, the iPhone came out, and it was like this massive leap forward. And that's where we are. Hopper is great, but man, all these companies that spent all this money building these out, I mean, the price on this is going to plummet. The prices has been plummeting to rent Hopper servers. That's going to plummet because Grace Blackwell is 40 times higher speed. So if you're OpenAI, if you're Anthropic, if you're XAI, if you're, any of these companies out there, certainly any of these software companies, you are going to want 40 times higher performance. Now, if it was 4 times better performance, maybe you don't have to upgrade, but 40, yeah, you are upgrading. The big topic on the conference call, I would say probably almost half the conference call, related to China. And Jensen Huang not only talked about it on the conference call, but I was in the car, I was listening to Jim Cramer. He did an interview on Cramer, and it was basically like a pitch to the president, which you can probably imagine. Jensen Huang has spent some time with the president. He was in Middle East with the president maybe a week or two ago. And so you can understand he's made this pitch. We talked about how the H20 was a modified version of Hopper. They weren't allowed to sell that, and that was $8 billion. That was for the upcoming quarter, the second quarter. Now, here's what Jensen Huang said, and I 100% agree with him here, that China's AI is going to move on with or without the U.S. Trying to restrict China from AI is like trying to restrict them from air. Or if you want to relate it to, or draw an analogy to technology, it'd be like going back to like 1998, 1999 and saying the United States is going to have the internet and China is not going to have the internet. Or the United States is going to have one version of the internet and China is going to have a different version of the internet, a slower version or a less advanced version. It might work for a year or two. And that is what the president is weighing, because he has national security advisors advise. And this is the same was true for President Biden. And President Biden, obviously a little bit more of a traditional politician than President Trump. President Biden was going to rely heavily on his aides and his staff. And some might even say they were running the show. We don't necessarily have to get into that argument, but President Biden, whether he was able-bodied or not, was going to rely on his staff. And certainly when you come in there, you're going to rely and listen to the national security defense people. And people that are in charge of national security here in the United States, they look at national security like a football game. Like, you are going to look for every little edge that you possibly can. So if you're Bill Belichick and Tom Brady, you're going to deflate the footballs just a little bit, or you're going to, you're going to, do a Spygate and secretly film some of your competitors. You're going to do everything you possibly can to get an edge. And that is the worldview of a national security person that works for the government and that addresses the president. And so their view is whatever we can do to slow down China, we should do it. And so that's their view. And the president is absorbing that as he should. And he has to take that information in. And then at the same time, he has to weigh, he's been listening to Jensen Huang. And I would say that's one of the great things about President Trump is, as opposed to most other presidents, you can actually get directly to President Trump. Whereas if Jensen Huang wanted to talk to any president before President Trump, he would have had to go through 35 aides and they would have ran him through the rigmarole. He might have had to donate some money. And some would argue you still have to do that with Trump. But once you get Trump on the line, you can talk to him and you can get your point across. And Jensen Huang's argument is, look, China's going to move on with or without us. It has the compute to train and deploy advanced models. The question is not whether China will have AI. It already does. This is all true. The question is whether or not the world's largest AI markets will run on American platforms. And so that's the choice America has. I would say probably over the next, May? It's almost June. The next 6 months, they have a decision to make here. Whether or not they are going to allow China to have access to either cutting edge or modified versions of Nvidia's chips. And it's a tough decision. It's a tough decision for the president. Because I actually, in this case, I actually can see both sides. I can understand the national security argument. And if that's more your focus and that's your brain and that's your worldview, totally get it. If you're more tech focused, and like most of the people that are probably tuning into this, we just want to see our shares of Nvidia going up. It's hard to say though, how much for, like, let's say the president comes out tomorrow and he's like, well, my tariffs are gone. This sucks. Let's just open up the Chinese market to AI chips as well. How much more upside does Nvidia have? We know that there's $8 billion of revenue sitting out there for the upcoming quarter. And so it's hard to say, but you definitely come back up to all-time. I think we'll talk about this technically here in a moment. I think you're coming back to all-time highs with Nvidia. We saw this with Microsoft after earnings kind of moved up to this resistance point as it relates to Microsoft at 460. And now you're hitting your head against that. Same thing is likely true for Nvidia. Walk up here to 154 and then it's decision day. You either get rejected at 154 and you're looking for areas of pullback, or you break above and you gap higher. And certainly the announcement of President Trump softening his stance on China getting access to Nvidia chips would, I think that would happen. We talked about the business. Obviously, Nvidia is completely transformed. Maybe a little over a year ago, still about over 20% of their revenue was coming from gaming. And now it's just a sliver. It's less than 10%. Data center coming in at $39 billion. You're seeing very consistently quarter over quarter, despite even the slowdown in China. That demand is getting picked up elsewhere because the company consistently adds $4 billion of revenue to the data center. And that's likely only constrained by Taiwan Semiconductor's ability to manufacture these chips. This leap of $4 billion added every quarter to the data center would actually be faster if they could make these chips even faster than they already are. Now, from a financial perspective, you are going to see why this is a $3.3 trillion company, and you have a forward multiple of 32, which some would say is high, but it's certainly not as high as I've looked at Nvidia when it was over 50 times forward. This is actually pretty cheap compared to where it's been in the past. You've got massive gross profits at this company because they are charging such a high cost for these types of things. And they talked about on the conference call, the gross profit is going to expand in coming quarters. They're only spending $5 billion operating the business, which was just $1.5 billion higher than the previous period. So you had 69% revenue growth, just modest growth on the operating side. You had operating income of $21.6 billion. I don't want to just gloss over this. Nearly $27 billion of gross profit off of $44 billion of revenue, $21.6 billion of operating income. These are software, these are search engine, Google-like numbers for a hardware manufacturer. And it flows mostly down to net income at $18.9 billion in the quarter. Company continues to add cash to its balance sheet, which is absolutely fantastic for the company. This is a massive acceleration in terms of cash year over year, or excuse me, since January of 2025 up to April. And inventories, when you have a hot selling product, this is what you like. Accounts receivable looks good. They have a little bit of long-term debt, but obviously from a balance sheet perspective, it is fantastic. For a 3-month period, they printed $27 billion of operating cash flow. Last year was $15 billion. They are not Intel, as I always say. They are not trying to build fabs, although they are building manufacturing facilities here in the United States. But I do believe they have contract manufacturers partnering there. So you're not going to actually see that show up on the cash flow statement very much, I don't think. And, not spending a whole lot. So what do you do with this $27 billion of operating cash flow? You are buying back the stock. $14 billion over the past quarter. And they probably got good prices, because earlier this quarter, shares, in fact, last month, shares were at 95. And as I join you today, you are about $50 higher on the shares. So things are moving in the right direction for Nvidia. Their cash year over year just skyrocketing, as you can imagine, even though they are buying back the shares. In terms of geographic regions, everybody points out Singapore. They've done a nice job, I think, clarifying that Singapore just is a place where United States companies happen to build. Some of these Singapore chips probably make it into China, but they stress that it's a relatively small amount. Depends on your sources. It's probably a larger amount than Nvidia wants to admit. But in terms of compute, again, $34 billion. Here's the key about their networking is in the beginning of a ramp-up period. So we have Blackwell going out. One of the ways you get allocation, so if you're Microsoft or if you're Google or if you're certainly like a CoreWeave or a Nebulas, who we've talked about, if you want allocation to Blackwell chips, what you have to do is you have to pair it with their networking solution. Okay. If you do that, you're going to get higher allocation because Nvidia makes a lot of money off this $4.9 billion. And so if you're willing to do that in the early days, you get higher allocation, meaning you will get more of the chips. As Blackwell matures as a product, like we saw with Hopper, towards the end, the networking becomes a smaller portion of the overall revenues. And then other companies out there in the networking space, particularly Broadcom, will benefit quite a bit. Now, we are seeing in the after hours, as it relates to futures, some of it on the backs of this, these Nvidia earnings, but also these trade negotiations that now seem to be struck down in the courtroom. Those are definitely in flux, and that is driving future prices, as I'm seeing in the after hours. My goodness, we are seeing Fang Plus up 2%. Russell has gapped up even more. These are up 2%. Mid caps are up 1.8. NASDAQ futures up 1.8%. We are ripping, absolutely ripping higher on the backs of not only Nvidia earnings. You did also have Salesforce report earnings after hours as well. Things went relatively well for Salesforce as well. And the reason why we kind of discussed Salesforce is I think shares were initially up 4 or 5%. It looks like they're finishing up maybe close to 1%. We'll see how this stuff follows through tomorrow. Could be a complete risk on day for software stocks and really the stock market in general tomorrow. But the reason why we focus on Salesforce is they're the ultimate benefactor, or they're one of the companies that benefit from Nvidia chips absolutely doing particularly well. When you look across the semiconductor space, I'm sure others are going to be doing well. AMD up 2.4%, Broadcom up about 3.4%. We'll see if it's trickled over to an Intel. Yeah, that's up about a point. And then I think as you look into kind of the ancillary plays like the Aritza networks, that's interesting. That's actually down. We'll see if this is like updated. But if you look at maybe even, edge cases like Tesla up 2%, Apple on the tariff announcements, my gosh, up 3.5%. I had a leveraged 3x or 2x ETF in Apple. Of course, I sold it today for profits. If I would have held, I would have made a little bit more money. So Like things are absolutely flying right now. And I'll answer some questions. That was kind of my rundown on Nvidia. We'll get to some of the other news. We'll talk about Tesla. We'll talk about President Trump's tariffs here in a moment. If you have questions, drop it in the chat, and we'll have our producer Ryan star them. Any price targets for Avago, AMD? We all know Nvidia will go back to 200. So yeah, that's a great question. Let's start with Avago. I'm not going to say I'm not a price target guy, but price targets are always a tricky thing. But in terms of technicals, I will tell you what we're up against. With Broadcom, we're just like Nvidia, just like Microsoft, those three stocks in particular, we are butting up against all-time highs. Two things happen when you butt up against all-time highs. And this is obvious, nobody tuned into the live stream to have you tell me, oh, price is either going to go up or it's going to go down. But depending on which way it goes decides your actions. Okay. And so this is what you want to monitor. I know we're on Wednesday. We're heading into a Thursday, a Friday. We don't have a long weekend. So this is heading into next week. This is what you're monitoring with any stock that's of this setup. But right now we're looking at Broadcom. You're at all-time highs. Last time you were here was back in February and you got rejected. In fact, you got rejected hard all the way down to 139. So that is the knee jerk, what you're going to assume is going to happen, that the trend is going to play out. We're going to get rejected at these highs and we're going to get a pullback. The first area where it's interesting on a pullback is 189, a little lower than that 170. Obviously, if you get all the way back down here to 139, I know it sounds insane. You're at 239 and I'm like, oh yeah, if you get one back to 139, just make that decision now. Because President Trump could get his tariffs slapped back on. He could do all types of ban. It's like there's a lot of stuff that could happen. Okay, so just make that decision now. But if you get rejected here with Broadcom, creates buying opportunities. This one is, I wouldn't say well overextended, because I think we're making we've essentially established a new trend with this stock. And you've got to ignore a little bit of the April price action because some of that was just absolute despair. So that's the first scenario. This is the likely scenario. You get rejected here. So price target in the short term, I would say, was be back down in the $200 range, creating a buying opportunity. Now, the bull case is that China market gets opened up and the tariffs stay off, or Trump has to negotiate even harder now. I don't know. Well, you break to all-time highs. And when you break to all-time highs, it's very similar to, Michael Jordan going up for a dunk. He has a lot of hang time, and there are some traders and there's some momentum people that are just waiting. They're literally waiting with their finger on the buy button with Avago, and they're just waiting for this breakout. So they play these breakouts to the upside because this is a beautiful thing when you break to the upside. A good example more recently is probably Palantir did this. And so you have to go back a little ways, but we had all-time highs with Palantir. They were back here. This is going back a few months. The all-time highs were at 84. And then when you broke up, you went to 125, did a back test, and then boom, you've ripped to a new high again. And so this is the price action. Bullish case scenario is that what you hope for. You hope that Broadcom breaks to the upside. Who knows how high it can go? It could go 280, 300 on this one. They report their earnings next week in 8 days. I don't want to say they have to be good, but there's no indication that Broadcom is not going to publish anything other than great earnings. They have a software business, which is about half of the business. That is likely doing extraordinarily well. They have a networking business, which, according to all my research, and I read a lot of geeky semiconductor research and Computech stuff, it's great. They have a great product. They have a market-leading product. Google has been trying to design them out, and they can't because Broadcom's product is just that good. They're like Nvidia. They're a step ahead of most of the competition. And so it's likely to be good. You get a break to the upside on this one. It could run. What you're waiting for in that, if you don't play the breakout, if you don't want to play this breakout trade, and I would just only play this as a trade, because what happens, like I showed you with Palantir, you almost always have a back test of the highs, back to 245. That would be your buying opportunity. Okay. Now, some of you are saying, well, why don't I just buy it here at 245? If the stock's at 240 and you're telling me to buy it at 240, why don't I just buy it? Because you have to remember what the first scenario is. is that we get rejected here and we come back to 200. Okay. So if you do buy it here at 240, I would have a very tight stop loss. Like we're talking $5 stop loss. Okay. Play the upside. The pullback will be great. That'll be a continuation. As you can see, if I can get my charts just suck these days. I don't know why. I must have something wrong with my trading view. But as you can see, that would be a resumption of that trend. Is a break to the upside, a back test to the highs would essentially be the resumption of that trend. And then you would be making now newer higher highs as you move forward. So look, this year with Broadcom, we're at $1.1 trillion. My long-term call, to answer your question a little bit here, John, is my long-term call on Broadcom is it's a $3 trillion stock because they have a software business that has, I believe, 90% gross margins. Okay. Hock Tan, as long as he's in charge of this company, is the cheapest CEO outside of maybe Elon Musk. And so he is going to drive a lot of profits and shareholder value. So I believe this is a $3 trillion stock. It's just a matter of when that occurs. It's not going to happen this year. You're not going to get to like $600-700 on this one. But over the next 5 years, you triple on this one. That would be absolutely fantastic. AMD's in a little different spot. I've done a fair amount of analysis on AMD, so my chart's a little messy. I think we've started that uptrend with AMD. So we made some highs, lower highs, higher series of highs. We've just confirmed a new higher low on this one. There is some resistance. I know I'm talking technically here. We've got some resistance for the shares at 112. My guess is obviously we're going to break higher. But my price target on AMD in the shorter term, from a fundamental perspective, would be a new higher high up here at 254. I would definitely be taking profits on the way higher with AMD, only because they're a half step. They're a half step, depending on who you ask, a half to a full step behind. They're a full step behind Nvidia. They're just not going to catch up. And then once they do catch up, the market is going to be mature enough that Nvidia might be able to drop price to maintain market share. Those types of things. Not that AMD can't win. But, the Nvidia's Michael Jordan and AMD is, Scottie Pippen. And so longer term, I want to own Michael Jordan and trade the Scottie Pippens. And like you said, Nvidia back to 150 is, I wouldn't say guaranteed, but that's the trajectory we're on. And honestly, probably next week, as long as Broadcom earnings go well and this tariff stuff. And, there's a lot of ifs, but that one's looking good. Looks like back to 150. Joe with the 999. Thank you, Mr. Joe Little. It's a sweet big rig that you have there. 999. Appreciate it, my man. Thank you so much. Really appreciate it. How much will it help Dell? So thanks for the question. This is referring to obviously Nvidia's earnings. I think they will help a little bit with Dell. Dell reports their earnings, I believe, tomorrow. Yeah, Dell will have, so we'll find out. Dell reports their earnings tomorrow. Their shares in the after hours, at least on this data, is up 2%. My guess is, you're going to get back up here. The challenge with Dell is that obviously when you are a component manufacturer, the margins are different with Dell. So obviously they're competing with Supermicro, they're competing with HP, they're competing even with the hyperscalers themselves. They're competing with Oracle, which has a solution where they're basically building these racks. And so, there should be plenty of volume and plenty of business for Dell. The challenge is it's at a lower margin. It's at a lower margin. When Nvidia charges 70% gross margin, there's just not much else you can squeeze out of it. Now, not to say Dell's not a great company. Technically, this doesn't look great. You've made a series of lower highs and you've made a series of lower lows, and you would have to break much higher back into the 140s, 150s. Otherwise, this technical pattern is playing out. And you've got opportunities with Dell. Scary enough. It sounds scary, but back into the 70s on this one. Actually, I would buy it back into the 70s. And so that's what I would think with Dell. I think if you get a pop in Dell, you're moving I would have a stop loss in Dell. I would not want to see, if you're trying to realize profits on Dell, like I look at the semiconductor industry, There's 4 stocks you hold in the semiconductor industry. Nvidia, and it probably goes in this order. Nvidia, Broadcom, and Broadcom's not a full semiconductor company. Like I said, about half their business, I believe, is software. You have Taiwan Semiconductor, and then you have ASML. Those are there's the holy trinity. That's the holy quadrant of semiconductors. You can hold those. Everybody else, I am taking profits. I am playing the pops and drops because, we can pull up charts of, pretty much anybody in this business. And, Micron was at 156 and then it was at 60. So these things swing super, super hard. And, I'm going to hold the market leaders, the TSMs, the ASML, the Broadcoms, the Nvidias. Everybody else I'm going to take profit on. That would include Dell, which at the current moment, at least technically, and it's tough to step in front of these things as it relates to earnings. But if we use super micro, HP reported it didn't look great. I don't know. It doesn't look good. There was a little bit of a transition as well with the Hopper, and my guess is the Blackwell margins for companies like Dell are not going to be great. But I love Dell. I love the CEO. I would take profits on that one. Technically, also, it looks like you're running up against something there. Red or green for the market tomorrow, William? Right now, it is looking like an absolute, like a bit, maybe potentially. And then we've had some big green days. Right now, the Russell up 2.25. These are futures. I've got NASDAQ up basically 2. FANG up 2.1, basically driven by Nvidia. I mean, right now it looks like it's all systems go. It is literally all freaking systems go. Isn't China already smuggled the best from Singapore? Yeah, that's the belief. So they addressed that on the conference call, that this Singapore revenue, and Singapore is an island nation that doesn't have a massive population. And here they are sitting on $9 billion of revenue. Again, this is Nvidia's claim that Singapore is just the billing record for companies. So companies in the United States bill, the bill of goods goes to Singapore. And it's possible that those chips in Singapore get sent to Taiwan, where you do have some server manufacturing, or it gets sent to another, exporting nation. But yes, I would agree. Some of these chips moving into Singapore absolutely make it into China. I also believe some of the cloud service providers, Amazon, Microsoft, Google, they're renting high-end servers to Chinese-based companies. So they have access to it. And this is Jensen Huang's point. Jensen Huang's point is the chips are getting smuggled in. They're renting servers from cloud service providers. China is going to get access to it. It's like air, AI, to think us. And this is like the arrogance of Americans. Okay. And one thing that I've noticed as we've rolled out Equity Empire Premium is I look at like the people that subscribe, and it's like it's 50-50. American and international people that are subscribing. So we are worldwide over at Equity Empire, and we really, really appreciate it. And one perspective that I can probably give people, and most people probably outside the United States are very much aware of this, but there is an arrogance to America. And the arrogance of America, particularly the military industrial complex here in America, is that somehow we are so far superior to everybody, and that we can control everybody's access to anything. We can control where democracy is. And, it's like we can control Russia. We can control, like, we try this. Okay. And they're trying to do it with semiconductors and AI. And it is foolish. It's foolish. It's foolish. But the government does a lot of things that are foolish, and we have to live with them as investors. Objectively, what should the president do about China having Nvidia chips or not? What's best for USA future? This is this is a $50 billion TAM question just for this year. And normally I have definitive, you guys know me, I have definitive answers on things. I'll be like, hey, this CEO sucks. He should get fired. And this is stuff you don't hear. People like to get on YouTube, and people in the finance world like to talk out of both sides of their mouths. I'm too old for that, and I don't need to do that. This is one of those questions where it's like, what should the president do? Should he listen to his national security and say we shouldn't give China access? Or should he listen to Jensen Huang and say, even if we restrict them, they're going to build it or get access to it, and it's not going to matter? This is a tough one. If I was President Trump and I was sitting in the White House, I would listen to Jensen Huang and I would say, okay, China is going to get access to this, and we are just going to, quote, outcompete militarily China. The other thing that could happen is, why can't we have a nice relationship with China? And nice can be in air quotes, but maybe we can come to some kind of mutual agreement with China and those types of things. I don't think China, I don't think we want to get into any kind of major conflict with China. And I don't think China wants to get into any major conflict with the United States. And so maybe we can just come out and say that and move forward. It's tough to say. What are your thoughts on EDA's ban from Trump today? EDA. What does that stand for? Oh, yeah. Okay. So this is design software from like Synopsys, who also reported earnings after the bell. How do you spell Synopsys? Yeah, so you had EDA software that was banned, or it wasn't confirmed, but there was a rumor that, or there is a report that potentially software that goes to design semiconductors, primarily Synopsys and a handful of other companies, makes this software that allows you to design semiconductors. That is being banned into China. That is, I mean, that's likely going back to the question that we just had, where it's like, what do you think, what do you think the president is going to do? Well, if it is true that EDA software is getting banned, then it is likely that we are going to go down the road of trying to restrict China as much as possible and try to delay their access to AI. Because again, this is like the internet in 1999. AI is almost exactly the same as the internet in 1999. I guarantee you the United States and a handful of other countries had a lot of access to the internet compared to other more remote countries and developing countries. But over time, now, due to advancements in technologies, most countries have access to some version of the internet. Same is true with AI. And whatever they do to ban it, I would say this has impact on these companies. I'm not currently recommending any of these semiconductor design software firms, only because, I mean, I don't know, guys. I'm a simple man. As you can see, Nvidia stock is doing absolutely fantastic. It's pretty easy to see this company's financials. We walked through these financials. These are just unbelievable financials. Even if the company achieves 0% revenue growth and they can just hold the revenue steady for the next 2 or 3 years, they're going to print so much operating cash flow and buy back so much stock and be able to do whatever they want with this cash. Go acquire other companies, start their own cloud service provider, whatever. Like, this is what I invest in. I think as you go further down the stack, there's obviously more risk. And, I don't think you need to take that in this market. I don't think, particularly when we have geopolitics at play. I was looking at, this is like a really, this is why you tune into these things. I've been looking at Eli Lilly, because it doesn't take a chart wizard. There you go. There's Eli Lilly. Look at where Eli Lilly price is sitting right now. $725. Look at what's happened to Eli Lilly for the past year. Every time you got to 725, what has happened? You have bounced, and sometimes you have bounced as high as all the way back up to 950, like in the matter of like weeks. In fact, you've done that 1, 2, 3 times in the past year. It's tricky though with Eli Lilly, is because, again, here's a situation where you have the government, and in this case, a little bit of Trump, but more the HHS Secretary Kennedy, Robert Kennedy. Gosh, I don't know what they're going to do with drug pricing and all that stuff. But this is like minus all that. This would be like half of a trading account right now. Is just this. Now I've traded this a little bit over the past couple of weeks. And then Novo's the other one. Look at Novo, NVO, I think it is. Yeah, look at Novo. Look at where Novo's sitting. Oh my gosh. I bought it here and I traded it. I sold it today actually on this move higher from 60 to about 67. I mean, these are light moves. But this is, increasing volume, hitting off a long-term trend. These are beautiful things. I'll get back to the question. When there's so much uncertainty, I don't know what they're going to do with drug pricing. I don't know what's going on with Medicare. I don't know what's going. I do know what's going on. It's just I don't have there's no certainty there, right? So it's tricky. It's tricky to understand. So when things are tricky and you've got President Trump, who's an absolute wild card, I would center around just, the big guys, when in doubt, if you have to gamble, you put it on the Michael Jordans. The Michael Jordans are at least in semiconductors are Nvidia, Broadcom, TSM, ASML, that quadrant of stocks. Everything else is they're all speculative, but the rest is even more speculative. When you will upload Salesforce earnings video will be going to Equity Empire tonight. I'm staying up. I've got some caffeine. I'm going to read. I haven't had a chance to read through the conference call. I did listen to Mark Benioff on Jim Cramer. He gave a little bit of an interview. I'll listen to the conference call or read through the transcript. I want to read through the transcript. I posted an article yesterday about their acquisition. So if you're not familiar, Salesforce acquired another company. Can't remember. It was like Informatica or something like that. It had kind of a weird name. $8 billion valuation. But when you dug into the company, it wasn't like oftentimes Salesforce like overpay. Like at one time, Salesforce had a ridiculous valuation. They're trading at just 24 times forward on this one. And they're growing at, you're growing at a decent clip still on this stock. You're still growing at like 8%. And they raised revenue guidance for not only the upcoming quarter, but the full year as well. But I think by like a couple $100 million. So things are going very well over at Salesforce. They made an acquisition of a profitable company where they're going to be able to have some synergies. Unfortunately, lay off some people, reduce the sales and marketing, those types of things. You also never know with these acquisitions. Salesforce might be just buying the company to kind of eliminate competition, but I do think they add something to actual Salesforce and complement some of the like MuleSoft and some of the acquisitions that they made in the past. So I'm excited about Salesforce. It looks good. And yeah, I will have an earnings video up on Equity Empire tonight. Aritza Networks, Aritza Networks. It could be because the attachment rate on the networking side of NVIDIA's business was very strong due to the phenomenon, like I talked about earlier in the show, that to get priority allocation of Blackwell, it's not that you must, but if you're attaching networking to it, which is basically you're getting Blackwell and then you're getting NVLink and you're attaching it. You're not running your own Aritza network, or you're not running your own Broadcom and kind of like your own third-party networking. Well, that should do very, very well for NVIDIA, but it comes at the expense a little bit of some of these other networking providers. Also, ANET coming up technically in this is making such a beautiful technical formation. You were in this long-term trend. You broke out of trend. What you often do when you break out of trend, you come back and you do back test of trend. This one did it to the dollar. Back test top of trend, get rejected here. What this can be, this is somewhat scary technically, because you have a high here that could be confirmed a new lower high, and that you're making now a series of lower lows. That's kind of scary, but what can materialize out of here as well is just a flattening of trend. and that the trend is going to flatten out, and then we'll just kind of like walk sideways back to the 120s. But ANET, I put in the category of when you can ring the register, you ring the register. I really like ANET. I like the management. They have a great product, but it's something that is likely going to get attached towards the back half of the Blackwell ramp. So you're looking into next year where they get nice acceleration. Also, ANET is primarily tied to Meta. So Meta is using them. Meta is a major client there. And so Meta is going to be, as Meta spends and the Meta spending, that's going to drive ANET. But, solid company. What about AMAT? Applied Materials. Applied Materials was a buy back here in April. Why? Because you had walked into a beautiful long-term trend. My chart's not going back. I'll split this out actually to a weekly view so you guys can see it. Look at this beautiful long-term trend that you were hitting with AMAT. This goes back to 2015. So this is 10 years. In fact, you can also push it all the way back to the 2012 timeframe. This uptrend was intact since 2015. So you had a 10-year price uptrend. You touched it in April. I won't say whether or not we recommended this over at Equity Empire, but you can probably imagine based on my track record, anytime a stock in a 10-year uptrend hits the bottom of the channel, it is pretty much almost 100% of the time an automatic buy. I like this one, but you've just confirmed a new lower high on this one, lower lows. You're looking for a break higher on this one. My guess is in the after hours. See where this one's at. For some reason, it goes away on TradingView. Maybe there's a way I can turn that back on. This one's up 2% in the after hours. With AMAT, if you're in this one, especially if you got it back down here, you're just walking the stop loss up. You're going to try to sell it. Ideally, you walk up here, make a new higher high at 250, and you just walk this stop loss up. And then you're not trying to, top tick this one, but you're just walking your stop loss up. And then eventually you're going to sell it at these highs. Hope that's fingers crossed. That's, ideally. So you would have bought it at 120 and sold it at 250. So you would have gotten a double on this one. And the double is a continuation of trend. That's why I love these kind of like no-brainer type of things. It's like you buy at the bottom of the channel, you set your stop just below it. So you're either going to lose $10 or you're going to make 100. And that is about as crispy as it gets. But ANET's got a very steady business. They've got a great buyback. They've got great financials. They do have a lot of exposure to China. So that's the risk there. John with $10. Thank you, man. It's a good time to take profits on plays like CLS or too early. John, what I would say, so like CLS, first of all, it's never too early to take a profit. Okay, no one's ever had a bad day at taking a profit. I've taken profit on every stock that we have talked about on today's show at one time or another, and I never, ever, 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 ever look back and regret it. Never, ever. CLS, you're about to hit all-time highs again. Now, John, here's what I recommend. Instead of pushing the sell button, so let's say CLS, I'm almost guarantee you it's opening a higher. Oh my God, 3.5%. So this one's opening up at 122 tomorrow, all being equal. So we're gonna push up into the all-time high. Well, not quite. All-time highs is 135 on this one. Instead of logging into my account and pressing sell, what I like to do is just put a stop loss, because I walk through the scenario with Broadcom that is likely to happen. When you move to all-time highs, I don't want to just push sell right here at the all-time highs. What I want to do is wait, because what can happen, one of the very likely scenarios is we continue to move higher and we break above all-time highs. And when you break above all-time highs, you tend to have momentum traders come in, quants, the hedge funds. I mean, there are hedge funds that literally they wait for this candle, and they make all their money on these candles. And so, you could go from 140 on this one to 200. And as that happens, stop loss, push higher. And then if you still like CLS, well, guess what? You are going to get a retest. And then when you retest, you can buy here at 130, stop loss 117, with the idea we're going to risk maybe $3 to make another 100 to a new higher high. So that is how I would play these ancillary plays. Not for everybody. Not everybody wants to be in there and be like Mr. Pro Trader, but I think you have to be. You have to be. I'm not going to tell you to do this with Broadcom. I'm not going to tell you to do this with Nvidia or these really core holdings where their financials and their buyback is bigger than the revenue of a lot of these companies. Okay, so that's what you have to understand about like the Broadcoms, Nvidia in particular. Their operating cash flow is bigger than the revenue of most of these other companies. And so you have obviously a lot of margin for safety in that. The CLS is the ANETs. Once and the risk with those companies is that China doesn't get access. And then what is China great at? China's great at a lot of things, but what China is great at is scaling something up and squeezing all the margin out. I don't know why this is the culture in China, but they don't expand margin in China. What they do is they contract margin. And so what China is going to do over if they're not given access to Nvidia chips is they're going to compress the margin on high-end chips. Instead of allowing Nvidia to get 70% margins, they'll sell them at 5% margin. They'll develop all the networking and all the connections, and they'll just dump that onto the marketplaces. They've done it with solar panels. They're doing it currently with EVs. They've done it in the steel market. They do it with consumer electronics. I mean, this is what China does. And so that is also the risk here. And with these ancillary plays, wouldn't want to be in that environment where China is basically slamming the bottom out of these, the margin on these things. Will Bitcoin follow US? I mean, Bitcoin is, I'll pull up iBit, which is like basically Bitcoin. Bitcoin just broke to highs. So here's your Bitcoin. Your highs were here at, this is iBit. So you can convert this to whatever crypto is. But crypto's highs were previously like in that 61, I think it's like kind of the 100, 110 range. And you can see you kind of peaked above. And now it's decision day for crypto. You're either going to get rejected here, probably continue this trend here. You got a, oh my God, you got a beautiful buying opportunity for crypto. If you get a pullback here. In fact, Equity Empire subscribers can expect that we will recommend this. If you get this pullback on iBit, it'd be back to about 50. This is in the shorter term. Okay, so you have to analyze these things as they come. But you get, and crypto, in my opinion, or crypto, I should say, Bitcoin trades on technicals. There's maybe a little bit of fundamental, but this is all technical. You've just confirmed a new higher high. It's not overwhelming, but you did just confirm a new higher high. And you've confirmed higher lows since the 2024, the inception of this. So this uptrend is still intact. It looks absolutely beautiful. The other option with crypto, like you said, you just kind of blast off, and then I can kind of check on Seeking Alpha is a great website, and crypto is up just fractionally right now to 107. I think it's been as high as like 110 more recently. So in my opinion, crypto should be a portion of your portfolio. How big of a portion you want it to be is completely up to you. What ends up happening with crypto is if you want it to be 1 or 5% or 10% of your portfolio, what ends up happening is after 2 or 3 years, it balloons to a bigger, I was buying crypto. Can't remember when I've bought it and I've sold it. And I didn't just buy back in, but I've bought back in the past year or so. I think I bought in this consolidation. It might have been here in this $30, $40 range. And so it's ballooned. It's like doubled on me. So, it just kind of, and you can do what you want at that point. I'm continuing to hold. There's companies out there that are leveraging their balance sheet to buy this. It's, this is not a call on anything other than Bitcoin. I don't almost never buy anything other than Bitcoin. Only because the other ones are just so speculative. I can't, I work too hard for my money to speculate that much. Do you think AMD will focus its on inference AI? Inference AI is the operational or running of the process. So when you're on ChatGPT, when you're making that call, like when you press your enter of your question, that is essentially an inference. That is a running of the model. There is also training of the model where that's on OpenAI side, where they're jamming as much data through the model to get it to give out answers. So the question is will AMD focus on inference and have its day later when generative AIs by Nvidia fully plays out? I mean, there is a market for AMD. The problem is, and I just did a newsletter on this, and free, shameless plug on the newsletter. But this is free. So equityempire.club. Go check it out. This is free, and we're not going to charge for this newsletter ever. So you're going to sign up for this and not ever have to pay. So AMD stock did just break out technically more recently. So you had a technical break, and I'll show it to you here. So you had a very steep downtrend going with AMD, and this dates back to 2024 to just more recently. I mean, it was a very steady of lower highs confirmed by a series of this is as tight a channel as you possibly can get. Now I'm on a log scale, so it skews it a little bit, but this is a tight channel of sell-off. Now we broke out of it. Look, you've got 2-3 candles break. And so that is what's having me believe that we have broken technically out of AMD. So that's exciting. Technically, we've broken out. Fundamentally, AMD has a slightly more as most of you know, has a slightly more diversified business than Nvidia. The problem with AMD is they missed the window with their MI250X, or I might not be exactly right on the product name, but this is what I talked about in the back half of this article. First, technicals look great, so I would not run out and sell AMD. You're just moving your stop loss on this one. You hope it runs to a new higher high, and that would be fantastic. But fundamentally, they wanted the MI325X. They wanted that to be a competitor to Hopper. Okay. And I showed you during the conference call, Hopper is 40 times weaker than Blackwell. And so you can imagine that AMD's 325X, Hopper is like, customers are turning away Hopper now. In fact, we saw that on Supermicro's conference call, that people like Supermicro actually had to eat some of the Hopper because the customers didn't want them. And a lot of their business, or not a lot, but some of their business dried up because people were like, I don't want Hopper anymore. I want Blackwell. And so the MI325X, it would be great if the Chinese market was open, because they would be gobbling up the 325X. And if the Chinese market is open or is opened up, AMD becomes a much better fundamental play. If the Chinese market stays closed and AMD has to go toe to toe with exclusively Nvidia and a little bit, not a little bit, but Broadcom as well, it is third place. And in my experience in the stock market, guys, you do not want to invest in third place. It's very similar to the Olympics. Okay. And I make this analogy a number of different times. Pretty soon, I think next year there's some Olympic Games. I think it's like the Summer Games in France or Paris or one of these beautiful cities out there. Imagine the opening ceremonies of the Olympics, guys. And you can go down to the opening ceremonies where all the athletes are out there, and you can go down there and just pick athletes, and the athletes you pick, you will get their medal. Okay. So if it's the Summer Games, I'm going to go down there and I don't know, women's United States basketball. I don't think they've ever won anything other than gold. So I'm going to go find Caitlin Clark or any USA basketball person, and I'm going to put her on my team. United States men's basketball usually wins gold. Probably going to pick them. Okay. What I'm not going to go do is go find people that might win bronze. Okay. when I can just go out, because you can literally go into the stock market and pick gold medal winners. So that's what you should do. Not like, I want to be clear. I have some AMD shares. Okay. I am playing this technical move here. Okay. And fundamentally, there are some reasons to own AMD. They have a diversified business. Intel sucks still. Okay. And so, but when we're talking about them competing in AI with Nvidia, they're a full step behind, because now, to finish my point in my newsletter, is that their next generation, which is called the 355X, that is not expected to ship until late 2025. And right now, we're basically at full production of Grace Blackwell. And by the time the 355X comes out, you are going to have the GB300, which is the upgrade to the Blackwell. So this often happens in semiconductors, is you are a step behind. And this is what's happened with Intel. Like, what has happened with Intel over the past, 15 years is they got a step behind, more than a step behind. Okay. They missed release windows. I mean, if you're just 6 months behind now with Nvidia running on all cylinders, it becomes then a year behind, a year and a half behind. And then when you start closing the window to invest in China or China being able to buy these chips, it complicates the situation. So in AI, AMD is not a leader. They're getting sales and they're doing well, but it's not good enough. I would rather have, for every dollar I'd have in AMD, I'd have $5 in both Broadcom and Nvidia. AMD would just be a speculative play. If you have more in AMD than you have Broadcom and Nvidia, I would simply take, and I'm not saying that the person asking the question did this. I'm just saying in general, just try to align yourself with gold medal winners. Figure out who's winning the gold. Underdogs is a great thing for a movie. Underdogs is great for athletics. Underdog is great for you personally at work or professional environment. Don't go for the underdog in the stock market. Go for the, especially when we're talking about big tech. You know what I mean? Like, there's a reason why I do the Fang Stock Recap show on Fridays. It's because, we're talking about Michael Jordan every Friday. That's what we're doing. William, 279 Canadian. Wonder what the conversion rate of that is today. Whatever it is, I appreciate it. As always, great content. No, thank you, William. Without you guys, we wouldn't have anything. What do we reckon on N-phase? Oh, man, N-phase. So as most of you probably know, there's a bill floating around in Congress right now that essentially ends some of the solar subsidies that you've had. This is, I would say this is absolutely not a falling knife. To steal a term from a viewer, this is a falling chainsaw. This is not just a knife. This is a chainsaw falling. And yeah, you are catching one. I don't see support on this. I mean, maybe we can find some here. My computer's a little slow. There's some support here at 15, which is another 50% lower. I wouldn't touch any of the solar plays. I just think and again, what I want to make clear to Michael and everybody watching is I'm coming from so when I say I wouldn't do something, I don't want you to automatically say that you shouldn't do it. And this is not me trying to talk out of both sides of my mouth. This is just me trying to categorize my perspective. My perspective is twofold. Number one, I've been investing my money for a very long time. I've done relatively well. I don't have to take risks with investing. High risk with investing. I do it, but it's with a very small amount of money, literally like thousands of dollars in a Robinhood account. It's like, oh, I'll buy this, I'll trade this, having fun. Okay. I don't have to do that with large sums of money. Okay. So if it's small sums of money, you want to have fun, no problem. End phase, you want to try to play a bounce trade here. There's certainly probably some opportunities for a bounce trade here. Looks like we've just made a new lower low, and maybe you walk your way up to a high and you can, make $10 on this one. Wouldn't want to do it myself because there's a lot of risk here. The other thing is with Equity Empire, with me giving out information, there's a much higher standard when other people are taking my advice and putting their money where I'm telling them to do. That is a huge responsibility. And you have to have guardrails when you do that. Because believe me, I've been in the newsletter business. I've seen the guys that have no guardrails and don't give a fuck. They literally will sell any stock. You could tell the guru, oh, this stock 100% is going to go down 50%, but if you talk about it, you're going to make 100,000 in sales. That I know guys that would sell it. Like they don't care. They know the stock is getting pumped and it's going to sell off. They don't care. I don't operate in that vein because renewal rates are terrible when you burn your subscriber. So I take it very seriously that people are taking my recommendations. So you have to have guardrails. So I would never buy a stock in this formation. This is a very steep downtrend. So I would wait for the break higher. And a great example that I outlined over several videos, this was over the course of the year, a year or so, was actually PayPal. So I hated on PayPal for this whole stretch. I posted videos where I was like, PayPal sucks. And then it broke out here. And that was the buying opportunity. And I had a video where, I talked about that was the buy because technically you finally broke. Okay. You finally broke out of that uptrend. And once you broke, you went from 60 to 90. And then you kind of back test the trend. And you basically come back here, back test the trend. Same thing is happening with AMD right now. Steep downtrend breakout. So with end phase, the way I would play this, you got to just be patient and play for the breakout. So the breakout would look something like this. Obviously, the stock would kind of walk all the way up to kind of like a higher high, which in this case would take you, like, unfortunately with end phase, it's really high. Like you've got to get back up into like this. It's not that high. I mean, back into the 70s. And then you usually wait for a back test. Wait for a back test to top of trend. That can be your move. So what you do is you buy back test top of trend, stop loss here, just in case we get sucked back into trend. But the likely scenario here is you find support and you make a new higher high. So you'd buy this one at 60, move back to 80. And that's how you would play the kind of the U-shaped. These things tend to U-shape. I know we see a lot of V-shape recoveries, but you typically with stories like this, you all have a U-shape here. Enphase is a great company. They have a great product. In fact, my house has Enphase products attached to it. It's a great company, but the solar business with the political environment and stuff like that, it's just really tough. Qubits and Rigetti. I don't have any position in quantum right now. And look, that's just my risk averse that's just my risk averse nature. But if you've been in this one, you've crushed it. So if I was in this one, I would just have a stop loss. Right now, my stop loss would be, on the conservative side, you wouldn't want to get below these lows here, which is crazy, but you wouldn't want to get below 5, which is kind of crazy. To preserve higher amounts of profits, you wouldn't want to get below probably this cluster here at 1250. And I would just keep moving this higher. The reason why I'm not in any or really recommending any quantum is they're going to have to raise massive amounts of money. And I've seen this over my career. In fact, I was looking at a stock today, 3D Systems, which most of you probably don't even know. But let's put this on a 12-month chart. 3D Systems is a 3D printing stock. And if I can get this chart in here right, at one time, this was a $104 stock, and now it's $1.57. And so I was investing during this time. Everybody was talking about, 3D Systems went from 260 to 90 in 3 or 4 years. So you've got to take profits on these things, but you can see what happens when the market loses interest in it. And this happens almost 100% of the time. Is something catches hype. I mean, it happened with Enphase, the stock we just looked at. There was a huge amount of hype around solar. You went from $150 to 270 on this one in like the span of 3 or 4 years, and then you got smoked. And so, quantum computing, it's going to need a lot of technology, a lot of research. And in my opinion, the companies that are going to lead the way in quantum are going to be Microsoft, Google, Nvidia, those companies. But again, speculative. I mean, I made money on Enphase. That was one stock I was in, not in a major way. But these quantum stocks, this is fast money right here. This is exactly what you want to be in if you want fast money. Just my style of investing, my perspective of investing, I'm not looking for fast money. I'm looking for a little bit of maintaining wealth with reasonable expectations for growth. And if you look, you look at like, Nvidia or something like that, over the past year, 18%, 5 years, obviously good, but even year to date, including an after hours bump, you're doing okay on this one. Okay. It's not a qubits, but that's just my perspective on the quantum stuff. They're going to have to raise a ton of money and there's no guarantees. And I like, as most of you know, I like pulling up financials and seeing $27 billion of operating cash flow and $14 billion of buybacks. Just makes me very, very, very happy. In fact, this makes me more happy than this stock chart. And that's just me. Now, I have a colleague, John McHugh. He would love the quantums. Okay. And he's looking for ways to play this. In fact, he's got we're on the Substack, equityempire.club, free newsletter. I'm going to publish a nuclear piece. He's got some names there that you want to take a look at. Not my style, but that's why I have a colleague that has different perspective than I do. Managed to convince a coworker to sign up for Equity Empire. Thank you. We'll hook you up. Send me an email. Colin, I'll put my email in the chat. Send me an email. I don't know what I can offer you for a referral bonus, but send me an email. I'll work something out with you. Are you still bullish on Onto and Camtech? Yes. So the next generation of Blackwell is this GB300. Really, the only thing it has is more high bandwidth memory. Now, these things take time to come back. Like Onto pulled into a beautiful area of support here with 93. Should find footing, move higher. Camtech as well. This one actually looks pretty darn good. You were in a steep downtrend on this one. This is a great example. Steep downtrend breakout. Now you're expecting maybe potentially a back test, but if not, push higher. With these, you're taking profits as well. This one more recently, I was in this one, got stopped, and then I'm back in this one. I was back in on this candle here at 49. Because as you can see, 49 coincided with all-time highs in 2021. It was support here in 2023. And so you had a shot here at 49. It was a gamble at that level. I was in at 49 and my stop was like 45. So I was risking 4 to, get back to kind of where we're at, but I continue to move the stop on this one. I got a quick trigger with these. Quick trigger. Okay. Anything not Nvidia, Broadcom, TSM, ASML, got a very, very, very quick trigger on this one. So the stop my stop on this one is at like 57. So I've pretty much locked in $7 in gains, but my hope is we get back to this area up in this range, 80-ish, 80 to 90-ish. And all along there, I'll just keep pushing the stop up and then I'll eventually get stopped out. It's possible you're going to just never reach the highs again on this one. Make high, lower set of highs that put you in the 80s. That's that. I mean, it's tough. It's, with the smaller stuff, it's it's more of a gamble. Hyperscalers, including Oracle. Oracle reports earnings in 20 days. The only problem with Oracle earnings will be how much money they are spending. It's tough to judge how investors will digest that. They're spending a lot of money on Stargate, which is in Texas. They're going to be spending a lot of money on the Middle East. So people that analyze stocks from a price to cash flow perspective, they're going to have to they're going to not recommend Oracle or they're going to move to the sidelines on Oracle. But technically, this is beautiful and you have great leadership over here. And what I like about Oracle, as opposed to Amazon, which has business risk with, tariffs and China and all that, in terms of their e-commerce business, Google has risk as it relates to search engines. Are they going to be the search engine of choice for the next 20 years? It's tough tough to understand, tough to digest, hard to answer at this current time. And Microsoft has risk as well. They have a software business. They're competing in AI. And so you're buying those companies for their cloud business, but they're not a pure play cloud company. Oracle is pure cloud with some database, right? This is a beautiful chart. This is a beautiful chart. It's a very well run company. I'll just say it. Any sell off in Oracle should be bought very aggressively. Thoughts on Navitas? Yeah, that's right. They announced something. They announced something. So NVTS. They announced something with Nvidia, but what I was reading from people is they weren't as bullish, I think, on the announcement as some people thought. But it was such a low volume, low flow, low multiple stock that it got pumped. I would sell into this pump. I mean, that just me personally. But I mean, technically it's just going to look unbelievable with the move it made. I mean, this is going to look, whoo. Okay. So this is also great. We were in a very well-defined downtrend with this one. Obviously this is a dramatic break. I've got it on a weekly chart, a dramatic break to the upside, but this is what you're waiting for. I wouldn't buy this one until you get a back test. There should be a back test here to 430, further back test to 280, or around there can be bought. If you're not in this one, that's how I would play this one. If I was in this one, I'd want stop loss currently right around here, probably 495, plus or minus 10%, depending on how, aggressively you want to be. Lower if you want to hold shares for the upside, higher if you want to lock in profits. That's how I would play this one. Because if you do break 495, higher probability you're coming back into the twos on this one. I don't know this business fundamentally. I haven't looked at their financials, but just technically you've made a very nice break of a downtrend. But longer term, this is still pretty ugly. High, lower high still. So still ugly. This is most stocks. Okay. Most stocks are actually pretty darn ugly. On Nebulous, we didn't really talk about, my assumption is Nebulous is probably looking pretty good. Jensen Huang is also, Jensen's also going to Europe next week. And the expectations are he's going to go there and he is going to go on a diplomatic tour and he's going to sign deals with Europe, just like he signed with the Middle East. And that would be good for Nebulous, who Nvidia has an investment in. And obviously they have a presence in Europe. So in fact, they're a Netherlands-based company, ex-Russia company that is now based in the Netherlands after the conflicts there. I took some profits on this one. I had two different positions in Nebulous. I had a long-term position, which is still there. And I had a short-term position that I kind of started down here in the $20-ish range. And when I double my money, I'm a simple man. And there was resistance here. There's high. You get rejected at these levels. Now, if you break higher on this one, you're probably coming back into the 70s and 80s. And so that's what you're playing. But me personally, I took some profits, but I still have a long-term position on this one. John still has an $80, $90 price target on this one. So I would yield to him as it relates to selling a longer term position. And I know this company very well, but he has a view in this one that we're going to go higher. And based on everything that we heard from Nvidia this week or today, no reason to believe that they won't. But you can have stop losses for sure. CoreWeave have more room to go up. I mean, if you have no motivation to take profits, here's what I do. Okay. I would buy a set of golf clubs. I would delete all trading apps and all news apps from your phone and lose the login to your whatever brokerage account that you have. If you have no intention to sell, I would not pay attention to the stock market. I would as weird as that sounds, as somebody that makes money on financial news content, that's the best way to avoid it, because companies like CoreWeave And I listened to the CoreWeave conference call. It was extraordinary. And I mean, my God, you got to put this on like a 1 day at least. It hasn't been public very long. I mean, my God, it's tough. I mean, technically, it just hasn't been public very long. So, I mean, it's going to pull back. It's just a matter of when and how much. But this looks great. But very similar to the quantums, they've got a lot of fundraising that they have to do. And there's probably a fair amount of dilution that will have to happen. That's why they went public. So instead of borrowing the money, they're just going to issue the shares, and certainly at shares at 116, and you've got a $55 billion valuation. This company would absolutely be foolish not to try to raise $5 to $10 billion at this range, which would be, real dilution, 5-10% dilution. Not the game I like to play. I like to buy, as most of you know, I like the companies that are retiring shares. Okay. Nvidia retired shares in the most recent quarter. Let's see if we can find the actual share count. So total number of shares outstanding. You can see since April of last year, here's where your diluted number of shares, 24.9 down to 24.6. Seems like a small amount. But when we're talking about each share obviously being worth hundreds of dollars, and you've got, multi-trillion dollar market cap, this is real. This is a real return that you're getting here. And so just my preference, I prefer the companies that are retiring shares. But again, if I had my money in CoreWeave, in fact, if you were levered long to CoreWeave, you are probably, if I go out to dinner with you, you're paying, and you probably are driving to dinner in a Lambo or something. Because this is, you went from 60 to 116 in like 3 weeks on this one. So do not listen to me when it comes to risk. I'm an older man, not an old man, but I'm an older man. I don't need to take the risk anymore. Just don't need to do it. Not that I don't need to like double my money, but it's just something I don't do anymore. UNH. Oh, UNH. Look at this candle. UNH is obviously United Healthcare. Obviously had that tragedy happen with one of their executives. Their other chief executive very promptly resigned or got fired or something happened there. This is also a falling chainsaw, as they like to say. You went from 480. It doesn't surprise me that we bounced. We came down here to 250 and now we've kind of bounced here. Healthcare is difficult. Here's what I would say about UNH is, why is UNH going down? That's the question to ask. So the reason why, and I've done videos on the paid side for UNH, and I've read through the conference calls and read the research and stuff. UNH is going down because people are using their healthcare way more than they had expected. So they're obviously an insurance company, and they project a certain number of, with a car company, it's a certain amount of accidents and liabilities on that side. With UNH, they're trying to predict how much healthcare people are going to use. And what they are finding is people are using way more than they had priced in. And so that has negatively impacted the stock from a profit perspective. And then obviously you have all this other stuff with federal government. There's some active investigations. There's alleged, maybe fraud by UNH. It's hard to know where all that shakes out. With that dark cloud hanging over the company, wouldn't be one that I would actively recommend. Here's what I would say is that if people are using their healthcare more, and UNH is having to reach into their pocket and pay out more, well, somebody in the healthcare business is probably doing really, really good in that scenario. So when the insurers are paying out, you probably want to buy the healthcare stocks that are getting those payouts because they were higher than expected. So you can probably imagine there are going to be healthcare stocks that report earnings next quarter and for the rest of the year that are like, yeah, we're doing great. Everybody's using their insurance. And it's at the detriment of UNH, and the benefit are some of these other stocks. Now, I have some of those stocks. The problem is Trump and his administration is a little unpredictable. as it relates to this. And it's something I can't predict. So at some point on the premium side, we will have some healthcare picks. And I've been very close over the last week recommending two right off the top of my head. And I mean, this is what you get on here. Eli Lilly is sitting on a beautiful bed of support. That's about as clear as day. Anyone can sign up for Equity Empire Premium, but I would just say, like, it's not for everybody. Just like, I think, people have kind of said, hey, Colin, you should do this, you should do that. For most of you probably know this, I spent a year working at MarketWise, MTKW. I spent a year working for this company. They do about they just reported earnings. They did $83 million in earnings, $83 million in a quarter. So I spent a year at this company. What people don't know is that on YouTube, I don't know who the biggest finance YouTube guy is. I'm certainly not him. But let's think of the biggest YouTube guy that's getting hundreds of thousands of views, and you're certain this guy is balling out. I guarantee you, I know people that you've never heard of that have no following on social media that do more sales in a week than the top YouTube finance guys. And I'm talking about the names everybody knows in YouTube finance, the top guys that get that could put out a video of them farting and it would get hundreds of thousands of views. Those guys make nothing compared to MarketWise is not the biggest company in the newsletter space. And they're doing 83 million. Okay. The financial newsletter space is huge, but it's not for everybody. It's not for everybody. I'm certainly not going to tell you to go buy anything from MarketWise. I would say most of their products is dog crap. And that's one of the primary reasons why I'm not there anymore. And I decided to start my own company because I would say most of the products are pretty bad. And most of the people running the products are really bad. They're as bad as most of the guys here on YouTube. One of the reasons why I don't watch a lot of financial YouTube is most of these guys are learning on the job. They're literally analyzing stocks and they're learning on the job with you. Equity Empire Premium, though, is for an investor that wants stuff done for them. Now, I do show you the research. I do post videos, but you are buying that for me to basically tell you, instruct you what to do. And there's a lot, and that's what the financial newsletter, and this is why I brought up MarketWise. There's a huge segment of people out there that don't want to watch YouTube, that don't want to learn the balance sheet, that don't want to go through the numbers, that don't want to listen to the conference call, that don't want to look at the charts. All they want to do is know when a stock gets to X price, I hit buy. When it gets to Y price, I sell. Okay. In fact, that's the majority of investors, not on YouTube, but in the outer investment space. You look at the Motley Fools, the Seeking Alphas, the Yahoo Finances, even Jim Cramer's Collectors Club or Jim Cramer's Investor Club. Those are the investors that they're trying to attract. If you love to dig into the charts, if you love to do the research, I honestly would just encourage you to continue down that path. And then as you get older, you feel like maybe I can, generate some ideas for you. Absolutely. Come subscribe. If you are busy, you're a family guy, you're making money in your practice or your job, or you're just doing life, and you don't have time to monitor everything like I monitor every morning. I'm waking up, I'm looking at all these charts. I've got all my blue chip stocks. I monitor about 70 stocks every single day. I'm growing through each one of these. On Seeking Alpha, I have all of these and more dumped into basically to where every moment of the day, it is sending me notifications of the news. And I know exactly what's happening with all of these stocks. And again, all of the large cap stocks, the smaller cap stocks, lesser degree, you have to pick your battles. And I tend to know what's happening at all of these stocks. And I'm reading through the conference calls. And so I'm your analyst. I'm your partner in these things. And that's what Equity Empire Premium is for. That's what you're paying for. I also have John McHugh who works me, former Wall Street analyst, hedge fund manager, independent trader for 20 years. And he's on board as well. So you get access to both of us. You basically get us working for you as as my brother can attest to, we both live out here in California. Taxes are high, expenses are high. For you to hire me as your analyst, I wouldn't do it for less than $500,000. If somebody was like, Colin, I'll give you $400,000 to be my personal analyst for a year, I would turn them down. You'd have to give me $500,000 for me to even think about it. Okay. Last time I checked, the Equity Empire premium subscription is a fraction of that cost. So you're getting it at a pretty good thing. Camtech, have they reported earnings yet? I don't think so. 63 days. Yeah, they did like 30 days ago. They were good. They were like good. I would just say they were good. Nothing special. Back half of the year. What this is a GB300 play. GB300 comes out. It's got more high bandwidth memory. The memory makers will have to scale up. And then you'll get your next pump here. China restrictions taken off. The whole industry just gets a, you just get a whole new pump there. Not sure when my screen is blurry, but what time do you do your charting on? It depends on the stock. To fit it on the screen, sometimes I do weekly, but most of the time when I'm here just by myself and I don't have an audience, I'm on a daily chart. I do daily, but sometimes it's a weekly. But then you have stocks like CoreWeave that just went public, and you're going to put that on probably going to put that on an hourly. I'm still a kid. Yeah, I would say, yeah, I'm still young, but in Wall Street, I've been investing for a long time, and I've been paying attention to the stock market for a long time. And I just look young because I think I have light colored hair. I appreciate that though. $4.99. Thoughts on Warren Buffett stepping down? Joe Little, thank you for the $4.99. Yeah, my man Warren Buffett. I just hope he can. He's an older guy now. To talk about old, he's definitely an older guy. He's accomplished a lot. He's an absolute legend, and I just hope that he's around for as long as possible, and he lives a happy and he's lived a happy and healthy life. I'm sure he would tell you that. And I am in this stock. I don't exactly remember when I bought it. It was a long time ago. In fact, I was looking at my son's account. One of his biggest winners is Berkshire Hathaway. It's in a beautiful shorter term uptrend. It's obviously, you want to slip this back to like a monthly view. It's in a perma uptrend. And yeah, so there's your uptrend. That uptrend goes back to 1996, folks. 1996. And you were at the top of the channel. Wouldn't be a stock I would buy right this second, but any pullbacks in this one, it's pretty much an automatic buy. But they have so much cash. I don't know much about the gentleman that's taking over, and that's something I'll spend some time on. Probably over the next month or two, I'll spend some time kind of doing some research into him and seeing what his plans are. So I appreciate that. Brandon's been following us since 2020 and done well. That's good. What's your take on Symbotic? Yeah, Symbotic is like one aspect of the robotics market. I'm in this stock right now. There was a big drop. We'll probably have to put this on a daily. There was a big drop. I can't remember when it was. Maybe it was back here, or there was a drop on some news. And I bought it on that drop. Might have been back here. No, it wasn't 2025. It was last year, I think. There was this big gap and drop, and I bought it here. So I'm up a little bit on this one. Robotics is still, it's still so new. It's still so new that I don't think you need to, I don't think you really need to be super early to this stuff. Symbotic, I think it's got a nice long-term momentum. Clearly there's support here on the stock at 18. There'll be resistance back up here, basically where the stock is right now at 30, and then again at 36. Shorter term or kind of intermediate term, you're making a series of lower highs. So you'd like to see this one break up into the $35, $36 range. That would be good technically. It's a good stock. It's got good momentum. Obviously I like Amazon as well. They're basically playing the same game. Amazon's obviously got a much larger business, more diversified, those types of things. I would say on the robotics side, I'm not buying Tesla right now, only because I bought it in the past. And it looks like you're making a beeline back up here into the 520s on this one, probably on the robotaxi news, which we really didn't get to discuss too much. But, this is going to be a big robotics story, and I think they're going to pull it off. When robotics takes off is later this year. Tesla will have an event. So Tesla is going to have an event at their cyber or at their Texas facilities, and they're going to show off their Optimus. The Optimus they're going to build the Optimus either to a few hundred or a few thousand or 1,000 units, and they're going to show it off doing stuff in its factory. That is going to be the liftoff event for robotics. It'll be that's probably the ChatGPT moment, iPhone moment, is when robotics will really take off. Okay, everybody in the newsletter business, they're all going to be writing copy and doing promotional packages about it. And so it'll really, really take off then. And so I think you can position yourself a little bit, but you're primarily semiconductors. You have some smaller, this is where AMD could benefit. General purpose CPUs, and certainly their Xilinx unit could benefit in a robotics world because you just need more of that. You have other semiconductor names like Qualcomm could benefit very much there. And there's a handful of others. I just happen to be recommending them on the paid side, so I don't want to give them all away, but I gave away a fair amount there. Yeah, appreciate it. Tempest. Yeah, I don't know about Tempest. Tempest took a big dump today, technically. So it's going to be like a wreck. There was a short report on Tempest AI, I believe. So you have this big red candle. So I haven't been in this one, but technically you're still making a beautiful series of higher highs, higher lows. Nancy's on board. This is about as good as it gets. We didn't get to discuss much about Elon. Elon's stepping away as a special government employee. This is more or less planned. He also has a time limit in which he could work for the government before he would have to be forced to divest away from some of his investments and do a further background check. So he was going to have a limited number of days. I can't remember off the top of my head the number of days that he had, but he was probably butting up against a portion of it. And he seems frustrated by Washington, which tends to happen by most people that are not involved in politics. And it looks like the long-awaited robo-taxi service in Austin, Texas, will appear on June 12th as a Tesla Model Y drove around with somebody in the passenger seat rather than the driver's seat, I believe, today. And I would temper the expectations here from a revenue perspective. I think they're going to start out with maybe a dozen cars. But if you look at Waymo's growth, they shared a chart the other day. Like Waymo's growth is absolutely, it may not have been Waymo that shared it. But Waymo's growth is unbelievable. Like back, they did 250,000 autonomous rides. I think they're up to an ungodly number now. They've done 10 million paid rides. That's as of May 20th. Like, I think they've done more rides like in the last quarter than they did the previous 5 years. So what happens in technology is it's around for a long time. Quantum computing, is a good example of this. Solar for a while, even AI and graphics processing and high performance computing. It's around for a while and then it just explodes in terms of scale. And we're going to see that with autonomous rides. Now, the one thing holding autonomous rides back is the federal government. And why is the federal government holding it back? I don't think it's because of safety. It's because of car registration. I literally just had to pay my car registration on my car. And this is depressing to report to you, but I paid $693. Those of you from California, this is not a surprising number, but those of you that are not from California or maybe from New York or something, I had to pay $700 to register my car. That is why the government is slow walking this. Okay. Because all of a sudden people don't need cars. Registrations go down. Car dealers who are major donors, major tax revenue perspective, like all of this stuff, automobiles is a huge driver of revenue. Also, many of these municipalities has poured a ton of money into public transit and trains to nowhere And all that goes out the window with these autonomous vehicles. And so you have a little bit of that. Will Adobe recover from here? I mean, Adobe's not going to go away, but they have a lot of competition, is what I would say about Adobe. And you're still in this downtrend that you've been in for a while. You're making a series of lower highs. Now, they have earnings very soon, 2 weeks from now. You break from these highs, or you break above, you're looking for a break above like 470 on this one. Like to see this one get above that mark, 470. So you need a green candle up to 470. Otherwise, the trend plays out, you get rejected here, you move lower. But the valuation's not insane, but I don't know. AI changes a lot of what Adobe's doing, I think. Tempest dropped because there was a short report. I didn't get to read the short report, but I was going to. But there was a big drop. It went from like 63 to, it went down like $13 or 20% in one day. It was on a short report though, but it basically took you back to a price that was here 2 weeks ago. So it's not too bad. And you're still in this with Tempest. You're still in this beautiful. I mean, you're making a beautiful series of higher highs, higher lows. Now you didn't confirm one here, but it's not the end of the world. In fact, Tempest retest down here at 42. You buy at 42, stop at maybe like 35 or so, with the idea like you're going to run this one back up to 100. That's how I would play that one. So it's not the end of the world. Will you buy an Optimus when it comes out, or wait for? No, I don't. I didn't buy the Vision Pro. It was $4,000, and there's a lot of things I would buy with $4,000. A Vision Pro is not going to be one of them. No, I won't buy an Optimus. I think the play there is there'll be a rental market for the Optimus. And it's not to say that the Optimus for $25,000 or whatever they sell them for, you can't trust Elon Musk when he says they're going to be $25,000. The chances are they're going to be like $80,000. No, I probably won't buy them, but I could see the rental market for them being very good. Or leasing one for a period of time. I don't think buying depreciating assets is a great idea, particularly ones. I mean, look, your phone depreciates, your desk, my glasses, like stuff depreciates, but it didn't cost me $25,000. So you want to lease that type of stuff. You lease your car, you lease depreciating assets, you buy appreciating assets, stocks, your home. Those tend to be people's primarily appreciating assets. You want to buy as many of those as possible. You want to lease and not commit to stuff that depreciates. And a Tesla, maybe the first version becomes a collector's model. That's possible. But I think these things are going to become so ubiquitous that the price is just going to drop and drop and drop. And yes, Cynthia can sympathize here. $700 to renew my registration Model X and CA. It's insane. I remember I had a Mercedes, and I thought it was so cool. I had a Mercedes, and then I got the registration, and it was $1,100 for a registration on a Mercedes, because there's some kind of like tax or something that they do. Yeah, card registration here in California is insane. That is why they're slow walking the autonomous vehicles. It's no other reason other than that. They're safer, they're better, they work, people like them, they're cheaper than an Uber, they're cheaper than owning a car, but the government doesn't want to give up their crazy things. And I could see this is a great use case if your husband has an illness, or anytime, or even you personally have an illness. This is going to be huge. I could see too, if you had young kids, like if you rewind back 3, 4, 5 years ago, if I could have gotten an Optimus, I might have, because I'm rocking one baby, I'm putting another one to sleep, I'm warming up the bottle. You're like doing this stuff. So the Optimus in some scenarios will be great, but I can still mow my lawn. I thank God I can still mow my lawn. I can still water my flowers. I can still, I'm still functioning. I'm not taking care of a parent right now, which is a blessing. And so that's what I would say. But yeah, if you're in a position like this, it would be a blessing to have an optimist for sure. Hedges on gold right now. I mean, I wouldn't be a buyer of gold here. The time to buy gold, obviously, I mean, this is obvious, right? It's obvious to say, well, the time to buy gold was a couple of years ago. But I did put my money where my mouth is, not just on the coin side. But I had some GLD. I've sold it. I didn't sell it at the top, but I've sold it. And I have, I've bought gold watches that, have probably gone up in value. I don't know, but you've made a triple lower top here, but and you've made a series of lower lows, so it's not a flag. The path of least resistance, I think, with gold is actually lower, and so you want to buy gold when it's in the dumps, is what I would say. But gold is an absolute portion of the portfolio. As you can see, we're in a channel, beautiful upper channel, but you very much overextended to the upside, I believe, on this one. I mean, the same is true like Costco. You know what I mean? Costco reports earnings tomorrow, and Costco, it's a wonderful stock. I've been shopping there a lot more recently with my kids just getting bigger and eating more and more food. They don't have a ton of healthy food to eat, and so we don't buy a ton of it, but they've got, vegetables and stuff that are pretty cheap. Costco's top of the channel. We're waiting for pullbacks in Costco. Pullbacks to like 800 on Costco. Bought. Walmart, same position. So why I'm bullish on Amazon, because like Amazon's trading at a discount to these two stocks, and they got a better business. So Walmart also overextended to the upside, pulling back. Thank you very much. Thank you guys. Yeah, we'll do more of these in the future. No, it's definitely not a once a year. I'll try to do these more. Honestly, I want to try to do these once or twice a month. Obviously, what I could be on here doing is be like, I have it scrolling on the bottom. If you're not subscribed to the free newsletter, please, it's free. We're not going to spam you. We don't take your emails and then go sell them to another list. Like, if you signed up for a MarketWise email, you're going to get 95 emails a day. We don't do that. We don't have advertising at the moment on here. I don't think we will. This is just a free informative newsletter. Now, what are we trying to do with this newsletter? We're trying to provide value, but at the same time, we're trying to, pique your interest on, if, maybe you're going to want a paid subscription. Maybe you're going to want, come over here and make the jump to a premium subscription. But if you're not ready for that, if you don't have the account side, you don't have the desire, no problem. Would love to have you over here on the free email, and we're going to be sending out 3-4 of these a day. John's got some excellent YouTube channel as well. Make sure you check that out. I think there's a link to it somewhere in here. Yeah. So search YouTube for Equity Empire John McHugh. He's been, and we haven't promoted this yet, but he's been posting trade ideas every single day. And he did GameStop like 2 days ago. And so what John does is when he does these videos, he's a pullback trader. So John, what he does is he pulls up a chart and he's like, okay, we're in a massive uptrend with Walmart. So we're waiting for a pullback to here, and this is where we're going to buy it. And so he sets up the trade for you. And so he did that with GameStop 5 days ago. So he set up these zones on GameStop. And then when I pulled up GameStop today, I was like, oh crap, GameStop's down 11%. So I pulled up John's video, and it pulled right into one of his zones. And I said, okay, this is not investing advice for sure, but screw just playing GameStop normally. There's this T-Rex 2X long GameStop. So I came in here and bought this. Now you won't only want to day trade this or swing trade it for a day or two. Don't hold 2X long stuff for more than a day or two. Like you're playing a bounce trade. And so John's stuff that he posts over here is actually perfect. First of all, if you just want to trade the underlying equity, but if it has one of these 2X things, he's a pullback bounce trader. and or at least the stuff that he's more than a trader than that, but that's his main strategy is run into resistance on an uptrend, pull back, bounce back higher. So he's been posting these videos and it's great. So he has the levels. GameStop pulled into one of those levels today. I bought the 2x long and then I sold it like 2 hours later for like a 3% gain. So, I mean, you put, I think I had like 3,000 into it. So, 3% on $3,000 is it's something. It's going to feed the kids for the next few days. So yeah, find John's, in fact, I'll drop this in the chat. His YouTube is pretty cool. Thank you, Pennywise. I appreciate it. Thank you very much. SoFi is a bank. A lot of people are like, it's not a bank. I liked it. I hated it at 18. I loved it at 9. It's okay where it's at 13. You're on this beautiful uptrend. It's making a beautiful uptrend right now. And it's in the middle of the channel. So it's not great, but it's not terrible. Okay. Terrible is a retest up here at 20. I would be a seller up here at 20. I'd be a buyer down here at 10. From a valuation perspective, it makes way more sense down here at 10. Hey, buddy. What you need? Good night, buddy. Good night, pal. I love you. Good night, buddy. I love you. Bye-bye, buddy. My son's saying good night. So probably should wrap up the stream. Guys, that was 2 hours. So as long as that we probably should go. Really appreciate all of you tuning in. Make sure you check out John's YouTube channel. I dropped a link to that in the chat. He's posting trade ideas 3-4 times a week on there. And like I said, they do it's a pullback strategy. So you have a stock that is broken to the upside. It very much like I've just laid out with SoFi. SoFi, we're waiting for a pullback. Good night, buddy. Pull back to 10 and then you're playing to a higher high on this one. It's just how I like to trade. It's how John likes to trade. And in an upward market, it's a great strategy because stocks, as you can tell, just tend to drift higher and higher. So thanks so much. We will do another one of these streams at some point. We'll come up with a format. I just like to do them in Nvidia reports earnings. Maybe we'll come back. I mean, if there's interest, maybe we'll come back for Broadcom. Broadcom's in 8 days. I mean, maybe we come back for Broadcom because Broadcom's a big one. Oracle's a big one. I mean, I got some big ones right now. You probably tell like where my portfolio is centered. Nvidia is definitely a big one. Nvidia is a big one. I have a very, very large amount of cash in Nvidia right now. And so I'm excited, as many of you are as well, based on what has happened in the after hours. Things look really good. Obviously, the Blackwell ramp is going fantastic. And now the wild card is China. And the wild card is President Trump, who will have his hands full over the next couple of days battling in the courts. We'll see if he gets a stay tomorrow or the next 24, 48 hours. Who knows? I mean, you never know with these court things. It was shaky ground the way he put these tariffs in place, declaring some kind of national emergency. It was shaky to begin with. We'll see what happens. And then obviously you've got Elon Musk and Tesla, Waymo, that story emerging. It's going to be exciting. I'm obviously going to be here on the channel. John's going to be covering it. We'll be covering it for sure on the premium side. And then obviously on the free newsletter, equityempire.club. Make sure you check it out. I appreciate all of you very much for tuning in. And thanks a lot. Appreciate it. Mark, thank you. Folks, that about wraps it up for today's show. Thank you very much for tuning in. Hopefully you guys have some stocks that are experiencing this upside. Looks like we've got a limit up day tomorrow, at least. Oh my God, it's 2.5% on the Russell, 2% on the NASDAQ 100. Oh my gosh, FANG futures up 2.2%. The Nikkei up 1.9. I mean, my God, the S&P 500 minis are up 1.7. It just looks like a limit up higher day tomorrow. Risk back on, and but these things can turn on a dime. On these days, you're looking at your risk management. You're planning for the downside, but obviously you're celebrating as well. Hopefully you guys have a wonderful rest of your night. I really appreciate, my man, Kunal. Appreciate it, my man. Thank you. We've talked on chat quite a bit, so I appreciate it. Thank you so much. I like talking, hit me up every morning. Sometimes it's like I'm on West Coast time. So sometimes your chat comes through and my phone. I do something that everybody should do. My notifications don't turn on my phone until 8 a.m. Pacific time, because I wake up, I want to be present for my kids. I want to be able to get them lunch, get them out the door. My kids go to school at 8 a.m. Then I can turn into full-blown work mode. Of course, at 6 in the morning, I'm looking at futures, I'm looking at stocks or whatever. But there's a window there from like 6:30, 7 in the morning to 8, where it's like I'm just trying to focus on my kids, get them out the door, give them my full attention, and then we go. But so if I miss your chat, 100% of the time, it's because I'm trying to be a semi-decent father, but at the same time, these markets are unbelievable, guys. Hopefully you're invested. If not, don't worry. We will have pullbacks. Don't feel like you've got to chase this stuff. Don't worry. We will. Donald Trump is president. He will do something and do stuff that will make things go back down. So don't worry. Things will be exciting, and there's always an opportunity somewhere. And I look forward to bringing to you. Thank you guys very much. We'll see you guys again at PFE. Michael, I will tell you, I'll post something on the Substack about healthcare. I'm just waiting for the Trump administration to do what they're going to do in terms of drug pricing and all that. Once that clears up, then we kind of know what's happening. But until we get clarity on pricing, it's tough. That's a tough one. I'm still invested in some healthcare stuff, but it's hard to make a move new when it's all, you just don't know what's going to happen. And it's just, now, if you have the balls to step in, you're in there. There's way more upside if you're willing to take the risk. That's what I would say. Gilead, yeah, that's a solid one. Folks, thanks for tuning in. I'll play some music on the way out. We'll see you again very soon. And as always, good luck with your Good night. Thank you, guys.